Taking a look at the daily chart here, we went down, tested 38.2% retracement at 1473 level. The market low came in at the 1471.60, so just about buck and a half, a little bit less than 38.2% retracement. And the market has since found a move. A corrective move back up to the upside. You can see here that line here at that 1473 level, and we'll move just a tip below that level and move back to the upside. So what do we do now? Well, we do have this most of the downside here today in gold. We did have this a narrow trading range here when the market broke through the 200 and the 100 bar moving average here, right at this line, this trend line here at the 1492.56 level is pretty much straight to the downside. The corrective move back higher took the price just above the 38.2 and then started its last leg to the downside. Now we're going to be watching this 1481.52 level again, that 38.2% retracement, to see what happens at that level on any sort of corrective move to the upside. But we did find that good support against 38.2, so I think that we're going to see some buyers on dips in gold. Let's take a look at silver next. We didn't look at this morning, but this currency pair continues to be under pressure. Our currency pair, this precious metal, continues to be under pressure, staying below the 100-day moving average here for the entire day. That 100-day moving average comes in at 34.83, and the current price trading about 33.44, so about 140 buck 40 away from that 100-day moving average. As you can see, the high for the day has been only 34.38, so all the entire day has been below the 100-day moving average. First time really in this period where the market has moved below the 100-day moving average. First time the market has not been able to trade above that 100-day moving average. On the hourly chart, we're getting a nice signal using the 100-bar moving average as well. This is a 100-hour moving average, and you can see the market did correct at this point. That correction to the top side took the price to 38.2% retracement. Let's move to the downside here. That was a nice selling opportunity. Got above the 100, went to 38.2, and then it started its move back to the downside. Now we extend this down to our new low here, and we got the 38.2, way up at 38.87. But what I want to focus on here is this 100-hour moving average. The market has been staying below that level, and that 100-hour moving average currently comes in at the 34.62 level. So not only do we have that resistance against 100-day moving average at 34.80-ish type level, and I'll put it in a line there at that level right there. We have the 100-hour moving average now moving lower, and we're going to hit that first on any sort of corrective move to the upside. So watch 34.62 on the upside and 34.80 if the market should find some support in silver. Let's take a look at the euro next. The euro has a inside day here, inside day in that it's the range, the high to low trading range is within the range from yesterday's trading. On the daily chart, with the 41.50 level is a level that we've been watching. We've been above and below it here today in the New York session. 41.64 is where that level currently, where the current price is trading, and the 41.50 level again is at 38.2% retracement. So we've been above and below that level for a number of different bars on the hourly. It kind of loses its luster as a key level. Now on the top side, we did come up and test this key 100-hour moving average at 38.2% retracement. This move to the downside as well has been tested. That level came in at the 141.90 level in the New York session. We came right up to that level and found sellers against that level, moved down to our support level as pointed out by some of our customers, came in at the 41.22 level. That 141.22 level, if I put a Fibonacci from this low to this high, is the 61.8% retracement of this move to this week's trading range. Monday's trade, Tuesday's trade, 61.8, 41.22, midpoint of the trading range, 41.55. It's very contained here. What we're going to need to see is a move above the 85 level or a move below the 22 level in order to push the euro to the upside or downside. Needless to say, I don't think this range is going to stay for the rest of the week. This is would be a fairly narrow trading range, so we're going to be looking for these clues to move above the 100-hour moving average or below the 22 level, and then look for a break through the new lows, or a break up toward more resistance of 42.35, 42.79. 200-hour moving average. That would be the targets on the top side for the euro versus US dollar. So watch those levels. Watch the breaks, and we'll see if we get that type of move. Let's take a look at the sterling versus US dollar. So this has been a currency pair that has had a up and down move here today. The up was on the back of a stronger than expected CPI data. The down came on the back of some more dovish comments from the Bank of England's Mervyn King. He's more concerned about the growth prospect than he is about the inflation. He thinks inflation may in fact cause the economy to slow even further, and as a result, we saw the sterling versus U.S. dollar head back to the downside here. The downside has had a nice or a lot of consolidation here over the last couple of hours in the sterling versus U.S. dollar, staying mainly below this 200 bar moving average on the 5-minute chart. It's 162.20 level. Let's watch that level in this afternoon. Break above the 20 level. Let's watch the 100 bar moving average at 162.33 to 37. 50% retracement of the day's trading range, and we'll see how the market reacts at that point. Those are the key levels in the sterling versus U.S. dollar. The dollar versus yen had a sharp move to the upside on the back of Bank of Japan's Shirakawa comments, dovish comments in regard to the economy, thinking that they're in trouble, basically, is in severe state was his official words. That caused the market to dollar yen to move to the upside here. We did have a corrective move to the downside. That corrective move took the price down to test the 200 bar moving average, and near this 50% retracement of the day's trading range, or most of the day's trading range. The market has moved below that 200 bar moving average. It's the first time, but it's kind of a slow move, sideways type of move below that level. Let's pay attention to it, though, because that could start some further momentum to the downside. If we break below the 81.22 level, all bets off for this sharp move to the upside here, and the potential for a further move to the upside for the dollar versus yen, at least for now. We'll see how that pans out. I want to take a look at the euro versus yen because this currency pair is caught in between support and resistance. There's a number of different technical levels of interest here. The 100-hour moving average broke through that on the upside earlier in the Far East session, then moved above the 200, but moved against the 38.2% retracement of this move to the downside. Level coming at 116.23. The market high came around that level, and the market then sold off over the next couple hours. The market moved below the 200 bar moving average, and since that time, let's call it the last 5 or so hours of trading here, we've been in between the 100-hour moving average, this trend line here. Both of them come in at the same level. That level comes in at 114.85, and resistance against the 200-hour moving average, 115.48. Also have these highs here coming around that level as well. So clearly defined levels here in the euro versus yen. What we'll be looking for is either that or this for the euro versus yen. See if the market can extend its trading range. In between, traders are going to trade against either of the extreme, looking to get good trade location for that potential break. If you buy dips here, you're looking for the break of the upside. If you sell offers here, you're looking for the breaks to the downside. If it breaks above, you get out. If it breaks below, you get out against your position. Let's take a look at the dollar versus Canada. This currency pair has moved to above the actually 100-day moving average. So this is the first time the market's been above the 100-day moving average, going well back to really moved a little bit above it at this day right here, but we haven't had a close above that 100-day moving average since September 10th, 2008. Now let me zoom in here, get a little bit closer here, and you can see that 100-day moving average comes in at 97.73. We've been above it. Market high came in 97.92, and has since backed off back below that 100-day moving average. So I've got to think that the traders are going to be looking to sell against that 73 level now and try to force the market back to the downside. Where can we go? The key test would be this trend line line here. This trend line currently comes in at 97.20, and that would be the target on the downside. If we're able to get above that, get below that trend line, then we have further move down to the 96.85 level for the dollar versus Canada. But I'm not impressed with the break above the 100-day moving average the first time in a long while for that currency pair, and the failure to maintain and move above that level. So look for sellers on a sort of rally here in the dollar versus Canada, at least for the time being. If we break above this old high right here, this high came in around the 80 level. If we break above 80, then all bets off. But look for sellers against the 70 to 80 level and a move down toward this trend line around the 20 level in the dollar versus Canada. Let's run once again. Remember that we do have that webinar this